On April 6, 2026, SpaceX held a private meeting. 125 analysts, 21 banks. The CFO opened with this. Retail is going to be the most critical part of any IPO in history. He said that to the analysts, not to you. 3 days later, the valuation jumped from $1.75 trillion to $2 trillion. No public filing, no S1, no new data of any kind. The people in that room moved the price. You were not in that room. I have a master's in aerospace engineering. I published a full breakdown about the SpaceX IPO filing. Link is in the description. But the story did not stop there. I ended that video with one line. Read the S1 before you decide anything. The S1 has not dropped yet, but the story did not wait. Before I take you into that meeting room, I want to put one number on the table. Starlink has 10 million subscribers. The valuation for that business alone is $600 million. That is $60,000 for every single subscriber. There's one number that determines whether that 600 billion holds up. The number that tells you what each subscriber actually pays every month. SpaceX has never published it. It started leaking this week, and what it shows does not match $600 billion. Hold that, we will come back to it. Those 125 analysts had seen something you have not. SpaceX shared its financials under confidentiality before any public filing. They walked into that meeting already knowing the real numbers. CFO Brad Johnson opening with this. Retail is going to be a critical part of this and a bigger part than any IPO in history. Now imagine you are one of those 125 analysts. You just finished reviewing the company's private books. The first thing the CFO says is retail is the priority. What does that tell you about who needs to be convinced? The week of June 8, 2026 is the formal roadshow. That is when SpaceX executives pitch the company to institutional investors across major financial centers. 3 days later, on June 11th, SpaceX is holding a separate retail investor event, 1,500 people. Institutions go first. They get their allocations. The price gets validated. Then retail gets their event. That sequence was designed by someone. It was not designed for your benefit. Back to Bloomberg. An analyst described the IPO pitch directly. It is not about the fundamentals. The math doesn't work. 3 days after the article ran, the valuation was no longer $1.75 trillion. It was over $2 trillion, $250 billion higher. No new public data released. Look at those two facts side by side. The math does not work. The price went up anyway. But the price moving is only part of what I want to show you. The number that is supposed to justify that price started surfacing this week. And what it shows is more complicated than the subscriber headline suggests. My last video flagged this. Starlink has never disclosed its average revenue per user, ARPU. How much does each subscriber actually pay every month? It is the one number every analyst uses to test whether a subscription business is worth what it claims. A company valuing its subscriber business at $600 billion should want you to see that number. That makes the story bigger, not smaller. Starlink has never published it. But their number is now starting to appear in outside research. Payload Research estimates global average ARPU at approximately $70 per month. The US residential price is $120. In many other countries, the price is $45. Then I found the historical data in the Saka Equity Research Report on SpaceX, updated February 2026. I had to stop and reread one table twice. Between Q4 2021 and Q4 2022, Starlink's average revenue per user in Europe fell by 41.5%. In Latin America, It fell by 52.3% in that same one-year period. North America is the only territory where ARPU has been going up. Now here is why that matters. Starlink added more than 5 million new subscribers in 2025. Most of that growth came from international markets, Southeast Asia, Africa, Latin America. Real subscribers, real growth. But if those new subscribers are paying $45 a month instead of $120, doubling the subscriber count does not double the revenue. The math changes. 10 million subscribers, $70 a month average, times 12 months, that is $8.4 billion in annual revenue. Starlink's standalone valuation in this IPO is $600 billion. 600 billion divided by 8.4 billion is 71 times annual revenue. 71 times, hold that number. Netflix is a pure subscription business. Publish ARPU every quarter. Full churn disclosure. Complete transparency. Netflix trades at roughly 7 times revenue. Starlink is being asked to trade at 71 times, with no published ARPU, no disclosed churn rate. I want to hear from you. If the S1 shows ARPU below $70 per month, does that change how you think about the Starlink valuation? Tell me in the comments. And then this happened. On April 4th, 2026, 3 days after the IPO filing dropped, Starlink cut prices in 12 countries. European markets from 60 euros to 45 euros per month. Southeast Asia from $99 to $69. US basic residential as low as $35 per month in introductory windows. The S1 is being written right now. The subscriber count that will appear on page 1 of that filing is being shipped right now. The way you grow a subscriber count fast is to lower the price. More subscribers in the headline, lower revenue per subscriber buried in that math. The filing drops in May. The subscriber number will be prominent. The average revenue per subscriber will require you to do the arithmetic yourself. If this kind of breakdown is useful before the S1 drops, hit like on this video now. I go this deep every week. One more thing on this before we move on. When most people picture SpaceX, they picture rockets, Starship, the dream of Mars. That is what the name signals. The S1 will show a different picture. In 2025, 70% of SpaceX's revenue came from Starlink, satellite internet service. By 2026, analysts project that rises to 79%. The business generating the money today is not rockets. It is internet access delivered from orbit. That does not make the rockets irrelevant. But when you buy this stock, the business you are primarily paying for today is a subscription internet service. And the number that determines what that service is worth has never been published. It's falling internationally and just got pushed lower by a round of price cuts that happened 3 days after the filing dropped. The dream is in the name, the filing is in the numbers. In 2025, SpaceX completed 165 orbital launches. That is 51% of every orbital launch on Earth that year. Every other rocket company, every government space agency, every competitor in every country, combined the other 49%. I checked that number 3 times before including it. 51%. Half of everything that reaches orbit goes on a SpaceX rocket. Look at that, half of everything. That is the argument behind $2 trillion, not the subscriber count, not the ARPU. The phrase being used in investor meetings right now is infrastructure monopoly. The idea, SpaceX is not a rocket company. It is the layer that everything else runs on. The port, the power grid, the toll road to space. Infrastructure monopolies do not go away. The argument is not wrong. That dominance is real. But here is what infrastructure monopolies actually trade at in public markets. Ports, power grids, telecom networks, 15 to 20 times revenue, because they are stable, predictable, and regulated. SpaceX at $2 trillion is priced at over 125 times its 2025 revenue. The gap between 20 times and 125 times is not the infrastructure. It is everything Elon has promised will be built on top of it. Starship, Mars, point-to-point travel on Earth, XAI. None of that has generated a single dollar of commercial revenue. Here is what I'm personally watching over the next 6 weeks. Starship V3, the first flight of the next generation upgraded rocket, is targeting May 2026. This version has never flown once. A successful test before the June roadshow will be inside every investor meeting. It will be part of the pitch for the $170 billion Starship valuation. A delay or a failure will not be mentioned in those meetings. Watch which one happens first. Blue Origin landed its New Glenn rocket at sea in early 2025. Not a direct threat yet, but it is the first proof that a second reusable launch service exists outside of SpaceX. The infrastructure monopoly argument works until a second infrastructure player arrives. That timeline is getting shorter. The monopoly is real. The question is whether 125 times revenue is the price of the infrastructure, or the price of the dream sitting on top of it. Those are two very different things to be buying. On April 10, 2026, there was $15 million in real money sitting in active bets on Polymarket, on what SpaceX's ticker symbol will be. SpaceX has not filed a ticker. The ticker does not exist yet. $15 million in bets on a symbol for a stock that cannot be purchased. Picture that. A man named Matt Tuttle manages a fund that has traded under the ticker SPCX on Nasdaq for years. Last week, he filed to rename his fund, new ticker SPCK. No announcement, no press release. He just moved. SPCX is now sitting open. That action tells you something about how people close to this market are positioning, while retail prices $15 million in bets on a symbol. The former is measurable. The financials are not public yet. The gap between the hype that is already in the market and the data that has not been published is where decisions get made before the information arrives to support them. I covered the full allocation mechanism and the Figma pattern in my last video. SpaceX is 40 times the scale. Same structure, watch it if you have not seen it. What I want to add to that picture today is this. SpaceX is not the only deal targeting 2026. OpenAI has indicated the second half of this year. Anthropic is targeting October. 3 companies, 3 of the largest potential IPOs in modern history, all inside a 6-month window. Every institutional investor sizing their SpaceX position in June is simultaneously building a model for OpenAI and Anthropic. Sovereign wealth funds in Singapore and Abu Dhabi had a finite amount of capital they can deploy into US tech IPOs in a calendar year. They are making that allocation calls across all 3 deals right now. When those funds reduce their SpaceX position to keep capital available for OpenAI, the retail tranche absorbs more of the float. When they increase it, retail gets compressed further. The math is being calculated in rooms that will not publish their conclusions until after the allocations are set. The 30% retail allocation is not a fixed promise. It is a starting point in a negotiation you are not part of. One more thing before we close. After I finished the main research for this video, SpaceX's 2025 full-year financial results leaked. They earned $18.5 billion in revenue. They posted a net loss of nearly $5 billion. The reason for that loss is specific. In 2025, SpaceX spent $13 billion on AI chips and data centers for XAI, more than they spent on rockets and satellites combined. The rocket business is profitable. Starlink is profitable. The loss did not come from space. It came from a decision to fund an AI company that spent $13 billion in a single year, while that AI company earned a fraction of that in revenue. That $13 billion decision is now inside the books of the company you are being asked to value at $2 trillion. You do not have to wait for the S1 to start pulling on this thread. The numbers are already leaking. That is the next video. The S1 drops in May 2026. The first number to find the moment it goes public is ARPU. If it comes in above $80 per month globally, the Starlink valuation case is stronger than the leaks suggest. If it is below 70, the subscriber headline has been doing work the revenue cannot support, and it is being actively shaped right now by price cuts. Starship V3 Flight 12 is targeting May 2026. A successful test before the roadshow means something different than one that arrives after it. Watch when retail can apply for IPO allocations versus when institutional books close. The institutions sizing their SpaceX position in June are already calculating how much capital to keep for OpenAI and Anthropic, both expected to IPO in the second half of this year. You are probably not making that calculation. On April 6, 2026, the CFO stood in front of 125 analysts and said retail is the most critical part of the biggest IPO in history. 3 days later, the valuation was $250 billion higher. The S1 had not dropped. When the CFO tells 125 bank analysts that retail is going to be the most critical part of any IPO in history, and the price goes up $250 billion in the same week, who exactly is retail being invited in to help? If you want the S1 breakdown the day it drops, subscribe and turn on notification. That video is coming in May.